Welcome to the Professional Certification Program, Certificate in Climate, Sustainability, and ESG Assurance. This video will outline the journey of building the next generation of assurance professionals, grounding skills in international standards, and framing them for executive judgment. In this program overview, we explore the purpose, audience, outcomes, and structure of this course. As assurance moves from voluntary practice to a regulated discipline, this program equips you to deliver opinions on climate disclosures and ESG governance that withstand rigorous scrutiny. By the end of this program, you will develop core competencies across climate, sustainability, and ESG pillars. You will learn to apply international standards, exercise professional judgment regarding materiality and risk, and effectively communicate findings to meet the expectations of investors, regulators, and stakeholders. Module 1 introduces the landscape, drivers, and the practitioner's mandate for climate, sustainability, and ESG assurance. This section frames the standards, scope, and judgment calls that participants must master. This case study examines investor reliance on disclosures. With 96% of institutional investors reviewing ESG data for decisions and over $30 trillion in capital tied to integrated mandates, independent assurance has become a critical fiduciary requirement to mitigate greenwashing risks. What is ESG assurance? It is the independent evaluation of climate, sustainability, and ESG information. The process relies on three building blocks: the subject matter, the reporting criteria, and the practitioner's final conclusion on whether the information is fairly stated. Several forces drive the demand for assurance. Mandatory regulation, such as the EU CSRD, investor requirements for decision-useful data, and the need to build trust by countering greenwashing, have all made independent assurance a priority at the board level. How does sustainability assurance differ from a financial audit? It requires navigating broader subject matter and maturing criteria. Much of the data is qualitative or estimated, which demands heightened professional judgment, especially since controls are often less mature than those used in financial reporting. The practitioner's mandate centers on three core obligations: maintaining independence from conflicts, possessing the necessary competence to blend assurance skills with ESG expertise, and applying professional skepticism to challenge management assertions. Module 2 shifts focus to key reporting frameworks. We will examine IFRS S1 and S2, GRI, ESRS, TCFD, and SASB. Understanding these standards is essential for the scope and judgment calls required in professional practice. In this workshop, we will practice framework mapping. You will learn to map requirements across global frameworks, identify gaps such as contradictions or missing data in client reports, and propose a robust reporting architecture that satisfies all in-scope standards. IFRS S1 and S2 serve as the ISSB's global baseline. They adopt the four-pillar TCFD architecture, covering governance, strategy, risk management, and metrics and targets, to provide consistency for capital markets, specifically addressing general sustainability and climate risks. The ESRS, under the CSRD, operationalize European standards using double materiality. This means reporting must cover both financial impacts on the company and the company's impacts on the planet. The standards are organized into cross-cutting environmental, social, and governance disclosures. GRI, TCFD, and SASB remain highly influential. GRI focuses on impact materiality, while SASB, now under the ISSB, provides industry-specific metrics. These frameworks are increasingly moving toward interoperability, mapped to a common ISSB global baseline for more effective reporting. Finally, we consider the implications for the assurer. Selecting the right framework sets the criteria for evidence. Navigating overlapping frameworks is crucial to ensure completeness in reporting and consistent application across time and peers. Welcome to Module 03, where we discuss assurance standards. We will cover the International Standard on Assurance Engagements, ISAE 3000, along with the specialized ISAE 3410 for greenhouse gas reporting, and the emerging ISSA 5000 standard for sustainability, all of which are essential for professional practice. This scenario highlights the challenges of accepting an engagement. When a manufacturer seeks limited assurance on incomplete data with tight deadlines, we must proactively address threats to our independence, confirm technical competence, ensure adequate resources, and rigorously assess our engagement acceptance risks. ISAE 3000, revised, is the foundational standard for assurance on non-financial subject matter. It governs ethics, quality management, and the requirements for evidence and reporting across both limited and reasonable assurance, serving as the benchmark for any non-audit engagement. For greenhouse gas statements, we utilize ISAE 3410. This standard supplements ISAE 3000 by providing specific guidance on managing emission risks, handling measurement uncertainty, and utilizing technical experts during site visits to verify emission data. ISSA 5000 is our global baseline for sustainability assurance. Its design is framework agnostic, meaning it can be applied to various reporting standards like GRI or IFRS. It is usable by all assurance providers and supports a professional transition from limited to reasonable levels of assurance. Distinguishing between limited and reasonable assurance is critical. Limited assurance involves reduced procedures and a negative form conclusion, whereas reasonable assurance requires extensive testing for a positive opinion. Regulatory trends are currently steering the market toward more frequent, reasonable assurance engagements. Module 04 moves into planning and risk assessment. Here, we focus on designing an assurance approach that is proportionate to the risk, ensuring our procedures are targeted, effective, and compliant with the relevant professional standards. In this workshop, we will develop a comprehensive risk register. We categorize risks into 3 key areas: inherent risks, such as climate complexity; control risks, regarding the maturity of data governance; and overall engagement risks, including reputational and regulatory exposure. Effective planning requires a deep understanding of the entity. We must map the business model, clarify reporting boundaries, analyze data flows, and evaluate the maturity of internal controls over sustainability information before designing our assurance procedures. Materiality in planning is not just quantitative, it is deeply qualitative. It guides the nature and extent of our work, requiring us to document our benchmarks and professional judgments to ensure we focus on the information that truly matters to stakeholders. When assessing the risk of material misstatement, we examine 3 core areas: completeness, to ensure no sources or sites are omitted; accuracy, to catch errors in calculations or emission factors; and estimation, to address subjectivity in models and climate scenarios. The assurance plan is our roadmap, translating risk assessment into action. It captures scope, materiality, and the specific procedures designed to respond to identified risks, while remaining flexible enough to be updated as evidence is gathered. Module 05 introduces materiality and double materiality. We will explore what truly matters in climate and ESG reporting, focusing on both the impact the organization has on the world and the financial impact of sustainability issues on the organization itself. In determining materiality, we apply 2 lenses: impact and financial. A threshold, such as 5%, often serves as an indicative benchmark, but qualitative factors, such as stakeholder expectations, are equally vital in justifying our conclusions and reporting outcomes. Finally, we distinguish between financial and impact materiality. Financial materiality addresses how ESG factors affect enterprise value, while impact materiality focuses on the environment and society. Under ESRS, both are required, and a matter is material if it meets the criteria for either lens. Module 05 continues with the materiality assessment. A double materiality assessment identifies sustainability matters, evaluates them through both lenses, and prioritizes those that cross a threshold. The assurer tests the rigor and evidence behind this process. Credible materiality rests on genuine engagement with stakeholders. The practitioner evaluates who was consulted, how their input was weighted, and whether conclusions are traceable to that evidence. When assuring materiality, the practitioner challenges the outcomes by testing the robustness of the process, ensuring completeness so that no topics are missing, and verifying that the disclosure transparently explains the basis for these conclusions. Module 06 focuses on ESG governance and internal controls. This secciones where we look at how climate and ESG accountability is owned, monitored, and reviewed within an organization. In this control testing exercise, we examine the design and execution of controls. Key domains include board-level oversight of ESG mandates, data and calculation rigor, and formal management review and sign-off processes. Governance over ESG data requires clear accountability. The board provides ultimate oversight of the strategy, while management owns the data and reporting process. Internal audit and independent assurance provide the necessary challenge to maintain integrity. Reliable ESG reporting depends on a disciplined control environment. The practitioner evaluates controls at 4 levels: entity-level policies, specific process controls, IT general controls over reporting systems, and management review protocols. Data lineage is essential. It tracks the path from source records, such as meter readings, through data transformation and aggregation, to the final reported figure, ensuring complete and accurate version control. When testing controls, we use three primary techniques: inquiry to understand design, inspection to confirm operation, and reperformance to independently verify the effectiveness of the control. Module 07 addresses climate and environmental assurance. This covers a broad scope, including greenhouse gas emissions, climate risks, and resources such as energy, water, waste, and biodiversity. For Scope 1 emissions, our testing focuses on the completeness of the source inventory and the accuracy of activity data. We reconcile sources to asset registers and vouch consumption to invoices and logs. Scope 2 testing requires assessing both location-based and market-based methods. We examine contracts for energy instruments such as RECs and PPAs to ensure compliance with reporting standards. Scope 3 emissions are complex, often representing the majority of a company's footprint. We use various methods, from spend-based to supplier-specific approaches to evidence completeness, even when estimation is required. Finally, we evaluate climate risk, which includes transition risks and physical risks. Assurers must critically evaluate the parameters and disclosures of scenario analysis to ensure they present a balanced view of future outlooks.